Okay, great. I'm delighted to be here. The previous team is running late, so we are looking for very, very short block times. So that was not a good example to kick off. But I'm delighted to be here. I'm the moderator of the panel. My name is Ousmene Mandeng. I'm CEO of Wirecoin. We are focusing on using tokenized money market fund shares to settle large value payments as payment instruments on blockchain. I'm also working with Accenture as senior advisor, having worked on many of the leading CBDC projects. Why are we here? The idea is to talk about why has adoption been so underwhelmingly abundant when it comes to blockchain and payments. Why is that? Blockchain offers an entirely new architecture to conduct payments. It has many features of the cash infrastructure. You are all the cash infrastructure. You all can initiate and execute a payment, and you can settle a payment with tendering a banknote, for example, to your neighbor. These are key features that we are now trying to replicate in the digital space, and that's why we believe blockchain is extremely important to do that. We have a fantastic panel here, a great mix. We have Gosia from the Bank of England, the central bank of the UK. We have Martin Hargreaves from Quant, a fintech in the UK. And then we have Hribar from Raiffeisen Bank, a commercial bank in Austria. So I give you just a minute each just to introduce yourself, and then we kick off, starting with Gosia.
Thanks so much, Ousmene. I'm Gosia Williamson. I'm a policy advisor and senior manager at the Bank of England. I lead a team that focuses on payments innovation broadly, but for the last few years, the team's focus was on digital assets. Some of you know probably the discussion paper we published on the proposed regulatory framework for systemic stablecoins. I haven't always been a regulator, so prior to joining Bank of England, I spent quite a few years in the payments industry, both at card schemes, but also interbank payment systems. So I do like to think about myself that I have quite a balanced view when it comes to regulation and industry. And thanks so much for having me here.
Great. Martin, please.
Thank you. Martin Hargreaves, I'm Chief Product Officer at Quant. We are a UK-based fintech. Are we close? Okay. We make infrastructure that connects blockchains together, and we're primarily looking at payments and asset management, so next generation payments. I've been there for 4 years, and like Gosia, before that I was in the payments industry, so at Vocalink with the UK clearing systems, head of architecture for there, and at one of their card schemes as well for some time. So my background is firmly payments for a long time, and then next gen payments is what we're working on at the moment, based out of London.
Super. And Vit, please.
Yeah, hi everybody. My name is Hribar. I'm from the Group Strategy and Innovation of Raiffeisen Bank International. We're a mid-sized bank headquartered in Vienna, and we've been dealing with blockchain since 2017, I think. Lately, I've been focusing a lot on blockchain payments. I think this is a very exciting area now with stablecoins being regulated, tokenized deposits, also the wholesale central bank digital currency developments. And to stay on top of the developments, we also participate in a consortium of European banks where we're exploring the issuance of a euro stablecoin together with the other banks. So I'll be talking today a bit more from the banking perspective, can give you some insights on the euro stablecoin market and also some insights on the use cases.
Fantastic. And some of you may wonder, why do we need to improve payments? Payments work very well, and they do indeed in Europe. But there are still use cases which do not work very well. To send a package from Barcelona to New York is still faster than making a payment. And that's why we need to think very seriously about how can we improve payments. So despite all these fantastic features that blockchain offers, why has adoption been so low? Gosia, will you start enlightening us, please?
Oh my gosh, this is like the million-dollar question, or probably we should have like half a day to discuss it, because I think there's lots of different puzzles, that jigsaw puzzles, and I think if we put them all together, this would form the full picture as to why the adoption hasn't been yet so fast. I guess one could argue actually that the changes in the payments landscape has been actually very fast. From the regulatory perspective, we always think, oh my God, we are trying to regulate something that keeps on changing all the time. So I guess in terms of adoption, there is a different components that we should be looking at. First, I think obviously there was a lack of regulatory clarity. Hence, there was a question as to what the product should look like. There was lack of confidence amongst the consumers and so on. There's obviously issues around technology. As many have already said today, it is still a relatively new technology. Someone has compared it to early days of the internet. There is also a question about use cases and whether there is a case for digital money to be used widely in the economy. So I don't want to take all of the points, but I think it's very complex. So it's $1 million questions, but I think there's a lot of jigsaw puzzles and we can explore them further.
Excellent. Martin, can you build on that? Yeah.
Can do. So first thing is in payments, it does take a long time. So if you look at UK faster payments, it took 15 years before it was doing the same volume as BACS. Contactless took 12 years to actually start working. So on the consumer space, having a really good UX and getting into kind of people's everyday consumer journeys takes a very long time. The other thing with payments is that there's really strong network effects. So you have both sides need to be on the same system, need to be familiar with the system, know about that. So consumer widespread it takes a really long time. It's very hard. Most people fail at it. What we do see is some really interesting use cases. So the reason why haven't gone anywhere is very fragmented. So there's lots of people trying to build the best solution for everybody. And I think where we're seeing more traction is smaller use cases. And it's nice where the regulation kind of, I was going to say congeals, it's not the right word, crystallizes around specific use cases. And those ones, I think some of those, and we've spoken to some today, have the potential to scale quite a long way. But in terms of displacing traditional payments, that's a very, very long journey.
Indeed. And maybe you can develop on that, because banks already have been investing heavily, of course, in the existing payments infrastructure, and it may lead to some reluctance to invest yet in another. Is that maybe also a factor?
Yeah, definitely. I can share two insights here from kind of my journey, how I present these use cases or the infrastructure to my, let's say, superiors or executives. So the first thing where I struggle a lot is to make a point that we're currently building the infrastructure and not exactly the use cases. Of course, these go hand in hand, but if we just, let's say, issue a stablecoin or tokenize deposits, this does not directly solve a client need. You also have to pair it with a certain use case, and here the discussions often revolve around that the first use case does not justify or that does not cover the costs of the infrastructure. So we often get into these lengthy discussions how to actually even start. There are, of course, also often the arguments, yes, the traditional payment infrastructure can also do that. We can also work on that, on improving the traditional payment infrastructure. But coming also to the use cases, here we also have to pick the right use cases, because we often hear cross-border payments are very expensive, slow, untransparent. But on the other side, I was also talking to my internal colleagues. We did an analysis, and what we found out that at least for certain corridors of these cross-border payments, costs that the banks bear are very low, but the price of these transactions is high, which means that banks also have big margins here, and this is something that is also not that easy to give up on.
Yeah. Maybe to offer just a little bit of perspective, we have seen a lot of innovation in payments, in particular for consumers. We now have these fancy apps and so on. But very little has changed how payments are being processed, and I think that's key. We have seen very little innovation there. So we are still using the old rails we have been using for decades, and nothing really has changed. And that is also why blockchain is so exciting, because blockchain is not about how you make a payment, but how the payment is being processed. And I think that is, why it is exciting to think about it, and not necessarily to replace what we have, but very much about extending what we have.
I think I would add to it because it was something actually. I've attended quite few of the panels today, and I think one thing that was missing that I haven't heard before yet is, we are not, the central banks are not only regulators, we are also the infrastructure providers. So I think one of the jigsaw puzzle that is also part of the picture is also the existing infrastructure and the RTGS systems, and a lot of jurisdictions obviously have embarked on the renewal projects. And as Bank of England, we are in the middle of the journey. We are looking at replacing the core system, core ledger, the settlement system. We have opened access to non-bank payment service providers. We have created new omnibus account. We are engaging the industry to see what is the appetite to extend the operating hours, because we know that digital money doesn't operate 6 to 6, right? But we want the industry to tell us what are the use cases. Would it be helpful to be 24/7 RTGS operation? So I think there is a role for regulators also as the infrastructure provider. And I think one of the panels here was talking about bridging the gap between traditional finance and the digital finance. And I think there is a role for us also to play with making sure that the infrastructure we provide supports innovation, goes and provides the solutions whereby the private sector can innovate. So there's definitely a role to play there as well.
Very much. In fact, a role that I think often lacks and needs to be told more clearly. There is a public interest to advance greater diversification in payments, and the public sector, I think, has a key role to play, because payments is very much about an oligopoly. But could we go about regulation? Regulation was mentioned earlier here, the adoption of MiCA. Is MiCA really a game changer? How important is regulation for adoption? Or Vid, you want to start from a European perspective, and then we go to the exotic island of the UK? Yeah.
So from the banking perspective, regulation is of course very important. We don't play in the gray zone. Let's say we're not the ones that move fast and break things, but rather wait for regulatory clarity, a bit push the regulator and get this regulatory clarity, and then hope we're not too late to enter the market. And here with now with MiCA and the stablecoin regulation, here we believe that this is a very good regulatory framework, at least for us also to enter the market or have the opportunity to enter the market. Of course, we have some concerns. Maybe the regulation is not perfect. There are some things that we don't like, such as maybe how the reserves should be managed or some capital requirements. But all in all, I think that MiCA is a very good regulatory piece that sets kind of the path where we want to go on the stablecoin side. Just one more thing to add. We're not looking just at stablecoins. Of course, there are also tokenized deposits, but there is even less regulatory clarity. One could argue that you can use or you can apply the existing regulation also to tokenized deposits, but there are still many unclear questions, open questions that have to be cleared out before we even have the possibility to do that. So stablecoins currently are, let's say, the only way to go.
Okay. Man, do you want to comment on that?
Yeah, just briefly. I agree on tokenized deposits. We've just been running a project in the UK with some of the banks looking at tokenized deposits, and the legal stream is as big as the technical stream. There's lots to do there, I think, lots of clarity that's still going to be needed, but the possibilities are pretty high with that, because a lot of stablecoin folks tend to be new entrants, and we've got existing banks also able to tokenize deposits along with the potential of CBDC, so it creates a very broad regulatory landscape, but also quite a lot of diversity in terms of payments.
Very good. I would like us to briefly touch on possible use cases, because we are looking for the killer use case. But one thing on regulation, I have to admit I have been struggling with from the beginning, which is what is a stable coin? You could argue it's just a commitment to convert at par, right? Which is like a bank deposit, or it's like e-money, or it's like a money market fund share. So I wonder why actually do we need MiCA? I don't think it adds anything. If an entity would like to issue a stable coin, it should become either a bank or an e-money institution or an asset manager. But all right. Let's focus about the use case. So what is the killer use case. I mentioned cross-border payments. There's a lot of activity there, but it's not only about cross-border. It is about greater automation in payments. Where do you see it? From your, the Bank of England is working on the digital pound. So,
Okay, I must admit I'm not in the team, not in CBDC team. I'm the stablecoins team, but that's fine. But I'm going to refer to something that one of the panelists before said, that I think the person envisaged that in 5 years' time we will be paying with stablecoins without realizing that we are paying with stablecoins. And maybe this is the use case, because we are looking for new use cases for digital money, but maybe what we are actually maybe what will actually happen is that the use cases will be exactly the same as we have currently with, publicly issued money. Maybe cash will be replaced by CBDC because everything is moving to digital. Maybe, like stable coins as a privately issued money is gonna, coexist alongside commercial bank money and e-money and so on. And the use cases will be exactly the same. But I think, to make sure that it happens, like a lot have said before, the user experience must be also, appropriate. If there is no use case that is different from existing money, then the customer experience has to be better.
indeed, I think that's a key problem. I mean, I have been working on the digital euro and the e-krona, and you're not changing the use case if at the point of sale you touch your phone, you don't care whether, it's a... Well, Martin, what is your use case?
So I think in terms of use cases, they need to be above and beyond. So what we are really interested in, and this is where we've been taking quite a lot of leaders around programmable payments, and what does that mean? How is it defined? How can we take risk out of things? So looking at kind of lock and release type things. So one of the use cases is a payment on delivery thing, right? So if you're buying from somebody else, you're buying on Gumtree or something like that, you pay them and then you hope they send it to you, or you send it to you and then you hope that their payment doesn't bounce. So what if you could create, effectively lock that money for that person, and then when it's shipped and they sign for it, then the money is released. So if the goods don't arrive, the money never leaves your account, and otherwise it does, right? And so you will pay them because you're guaranteed to pay them. If they take receipt, you'll get it. So that takes a lot of risk out, and it's a cool use case, but also that model transfers to a lot of other corporate type cases, right? So you could see that I've spent a few million pounds on a software project, and actually the auditor will determine whether or not my locked funds go to the people that built it for me. You can apply it to lots and lots of different use cases. So we looked at that. Also split and multi-payments. So can we combine payments from lots of people into a single payment, and payments from one person to lots of people, all in the API, all in a single thing? So where you've got multi-step, I mean, house buying was one of the things that was looked at, multi-step complicated journeys. Actually, you can set that up, and there's a button that says, okay, everyone's ready now, just go. So, and all of these need this user experience to be simplified and better and de-risked, and those sorts of things. I think this is still very much a search. There's lots of stuff going on. There's no killer use case yet, but this is the kind of direction that we're searching in.
Yeah. And for you, Vid, from a banking perspective, I mean...
Maybe just to add to this, one big use case area that we see is definitely the settlement of tokenized assets. So here we see that the tokenized asset markets will grow, different asset classes will get tokenized and put on blockchain. But if we put assets on blockchain, we should also provide a form of money on blockchain to be able to swap these assets seamlessly. So I think that this is definitely one of the biggest areas that's of interest also to the industry. Also the industry needs a cash like on blockchain to be able to develop further. And maybe a bit more futuristic one, the IoT economy, machine-to-machine payments. This is something that where we were expecting the adoption much faster, to be much faster. This hasn't happened yet, but I think this is also just a question of time when this will come. And here I think also the blockchain payments, including programmability, including micropayments, can contribute to the development of this area.
Excellent. My preferred use case is foreign exchange, because it's where blockchain is fantastic. Bidirectional trade, you settle instantly and atomically. You basically take out most of the risks that we have today in FX, which is the biggest financial market we have. Now, we wanted to discuss briefly public versus private chains. We've heard a presentation earlier about Polkadot. You know, I think public chain is fantastic, but it has many, many limitations. Where do you see this going in terms of, is it one versus the other? Will one dominate? Any takers for this very technical question?
You're looking at me.
No, not necessarily. No.
It's one of those really tricky ones, and actually, if you look at the Bank of England's discussion paper on the proposed regulatory regime for systemic stablecoins, one of the areas that we left relatively open is the use of the public permissionless ledgers. Because, you know, like we acknowledge how great the technology is. You know, we acknowledge, you know, all the, you know, like potential benefits it can deliver. But it has some challenges. It has some challenges, and I think from the regulatory perspective, and I think a lot of people spoke here about proportionality. So what I'm talking about here is I'm talking about systemic payment systems. So I'm talking about systemic stablecoins that are widely used for payments, right? So when we think of those payment systems, they will be subject to stricter regulations than smaller stablecoin issuers or smaller payment systems. So here comes proportionality. So when it comes to public permissionless ledgers, one of the two key areas that remain challenging from a regulatory perspective is governance and oversight. How do you ensure end-to-end risk management and oversight? Who can fix the problem when something goes wrong, when you have multiple legal entities undertaking different functions? And then settlement finality. So I'm not saying anything new, because obviously it's something that you know, international standards talk about, but these are definitely, you know, two topics where we've engaged with the industry much more, because we are very open. Give us the solutions, because it doesn't have to be regulated the same way, you know, as we regulate traditional existing payment systems. But how are we gonna get comfort that that those regulatory requirements are met? So from the systemic perspective, it's definitely governance and settlement finality.
Excellent. Martin, what do you think?
So with my product guy hat on, public versus private is a little bit about what's your community, okay, and how did you get them? So if you had to KYC them, even if you're on public, you were on a whitelisted smart contract. No one else on that chain can do anything with it. So it doesn't really matter too much whether you're on there or on a private chain, because you have the same people that can connect to it. The only difference really is around how you do the interconnection. So whether that's going to be through an API, or whether you add more people to your private chain, or you can whitelist people on your public network. So I think given the control and certainty advantages, most of these things are likely to be on private networks. Certainly most of the projects that we see that are in kind of like this kind of scale payments type things, they're all on private.
All right. But for you, what do you think?
I mean, privately, I'm a proponent of public chains due to composability. Due to composability, open access, and also the speed of innovation that's happening there. But of course, banks also need to protect their interests, and there are still many concerns that we have to overcome. I think this is also something that is being worked on in terms of privacy, scalability. But I think what's even more important, that oftentimes we don't even get to this question, which chain to use. So oftentimes we get stuck at the what is the value that we're bringing, what is the business case here, and only then you start to even think which chain to use. So oftentimes this is kind of pushed back to the end of the discussions.
Fair enough. Now, we have only a very few minutes left. Maybe just some concluding remarks. What do you think maybe we haven't addressed, should be addressed more? Where do you see the bigger gaps? Gosia, you start, and what?
I mean, generally, I think it's super exciting. I mean, like, I think we live in super exciting times, and, you know, we've seen so much change. And honestly, I don't know where we're going to be in 5 years' time, but I feel like we will be somewhere else where we, compared to where we are today. And I genuinely, like all my career has been in payments, and I think like this is probably the most exciting times of all. And I'm looking forward to seeing where it takes us.
Excellent. Martin?
Yeah, I would echo that. I think at this point, it's really hard to say what will be there in 2030. It would be great to see one or two or more really breakout use cases that kind of start to drive this, and which players are going to be kind of first, who's going to be dominant, what it's going to look like. It's also been in payments for a long time. Very exciting. Couldn't call it.
Martin, a point I'd like to make, repeat what you said earlier. It takes very long cycles. Now, we've taken, you mentioned it yourself, 15 years for ISO 20022. The public often doesn't appreciate, but that in payments, everything takes a long time. So maybe we shouldn't be surprised we've seen so little traction yet.
Exactly right. So these things take 10 or 15 years to grow, and then they're in place for 50 years. So Bax is still running the same as it was in 1968, just on newer hardware. Right?
All right, fair enough. Good.
Yeah, I definitely share the excitement. I think we're in a very exciting times, a lot of developments. I think on the stablecoin side, now we have regulatory clarity, we have an existing market, we have also positive interest rate environment, which makes the business case of the issuer easier or profitable. But on the other side, we're of course also observing the tokenized deposit side and wholesale CBDCs. On the tokenized deposits, we see that the global banks are quite active in this space, but here in Europe, we don't see a lot of movement there. There is the German initiative of commercial bank money token, but apart from there, we don't see a lot going on. And also, I mentioned the regulatory unclarity for tokenized deposits before. So we still think that this will take a couple more years to develop. And I think similar also for the wholesale CBDC. I mean, the ECB is now running the trials and experiment, but they also mentioned that this means no commitment to proceed with the process after the results are published. So again, I do believe that also this will take a couple more years.
Yeah, no, could be. The digital euro could be transformative for the euro system, undoubtedly. CBDC, we have a live wholesale CBDC in Switzerland. I think that's also an important signal. And tokenized deposit, I think, is the big one, which is, I would argue, you can just do it because it's the same bank deposits, the same bank liabilities, just running on a different rail. But, and that could have fantastic many applications. In particular, I'd like to say, when you combine it with properties of a check, where you can assign it to a third person and thereby design an open loop application. Good. All right, so time is up. Fantastic. Many thanks for your for being with us. Many thanks for your comment. And let's hope the future is bright. Cheers.
Thanks so much.